I'm Chris McAlpin with Sound Financial, and I hope that you're doing well. You know, often we dive into economic and market details without even coming up for air. We study our economic framework. We've read about inflation and politics. Did we miss the bull market? Are we getting pulled into a bull trap? And now Fed Chair Powell has very strong words that the Fed's going to fight inflation. And the markets have interpreted those as the Fed's going to fight inflation, even if the Fed pushes the U.S. economy into a recession. You know, at times like these, when financial emotions are really running high, the question that we're all asking is, am I going to be okay? Is my money going to last in retirement? Can I pay for the kids' college or some financial plan or financial goal in between? And we fret, and it comes back to that question of, am I going to be okay? And I completely get that. I understand. I had the same concerns. And I believe that one of the best ways for us to answer these concerns, because your financial plans are very important. And I want you talking to your sound financial advisor about your plans and the steps you need to take to reach your goals. But today, let's talk about investments. And I believe it is helpful for us to review our tests, to review our research, to look at how our investments could have performed in the bad markets of the past. How would they have held up over decades of time to see how they could perform today and give us a reasonable comfort in what we should expect from the outcome of our rules and our strategies. So let's look at a couple of these strategies. Let's look at both our stock strategy and our bond strategy. And so for our dividend stocks, we invest in positions that have paid increasing dividends over the last 25 years. Annually, we retest and re-rank the top 50 names. And additionally, we screen 4 companies that earn revenue in ways that do not harm people and do not harm the environment. And we offer our clients both traditional and biblically responsible investing strategies. And so our testing for this article showed that the S&P 500 index, its annual return dating back to the year 1992 was 11.3%. And that's the pink line on your screen. You see how this has reacted over the last 30 years. This is the hard part. It had 2 losses of over 50% during that period of time. The 08-09 loss in our testing was about 51%. By comparison, our strategy in which we take the S&P 500 index and we buy or hold the index on the last day of the month. If it's above its 200-day moving average, we sell it if it's below its 200-day moving average, which is one of the risk strategies that we hold for the individual stocks that we invest in, those individual dividend stocks. So this particular strategy over the last 30 years would have returned 10.8% a year. But this is the key. It would have avoided the large losses of 2000, 2002, and 08 and 09. In fact, it would have avoided 2/3 of the losses. Its maximum drawdown over that period of time would have been 16%, which is actually in this year. And so when you look at the strategy, you start to get a little panicky when you see that negative 16% this year, but it would have already rotated out of the way of a falling market. So we want to avoid large losses. And I think any one of us over 30 years would accept 95% of the market's return to avoid 2/3 of the losses. It helps fit our rules of avoiding large losses and investing in winners. Now let's look at a second strategy, our bond portfolio. And now many of you have a mixture of stocks and bonds, which is how we build our more conservative portfolios. Of course, bonds have really acted up this year. So let's see what we could have expected of them over a long period of time, over the last 22 years. Now, in our strategy, dynamic fixed income, we rotate between high yield bonds, short-term U.S. Treasury bonds, and 7 to 10-year U.S. Treasuries based on their 3-month total return. We can trade these as often as weekly, and they can. And Friday is our trading day, so it can be every Friday. And our goal is to invest in the position that's going up. Get out of the way of the position that's going down. And our testing for this article demonstrated that the Bloomberg U.S. Aggregate Bond Index, which we want to compare it to, its total return since January of 2000 was 4.2%, with a maximum loss of 12%. While comparing those results to our strategy for comparison, was a return of a little over 9% a year with a maximum loss of 7.5% a year. Now, keeping in mind, these are all testing strategies. They're hypothetical. Fees and trading charges, anything that can be associated with fees and costs are not included. But still, I think when you look at this strategy, you look at our strategy over this period of time compared to the standard U.S. bond aggregate index over the period of time, not a bad return on that bond index, but still leaving a lot to be desired, okay? What I hope that this does for you, what this does for me when I look at these tests, when I look at our investments, it allows me to clear out the noise that's going on in the world. There's a lot of noise. And we want to clear that noise out. We want to shut that noise out so that we can make a plan together. We can look at the facts. We can look at your definitive goals and take the steps to get there. You know, financial freedom has a lot to do with discipline and planning, but it also has a lot to do with you not worrying, with you having a sense of calm and a sense of peace, not following the markets and returns, the news, the politics and stuff, but you having a sense of financial peace and a financial stability. You know, that's where we want to get you. I don't want you worrying about what's going on in the world. I know you're going to. I know that I'm going to as well. But when you wake up worrying about the markets, I want you to look at these tests with me. I want us to look at what's happened in the past to give us a reasonable expectation of the future. Hey, listen, I appreciate you trusting us with your money. You know, during times like these, if you have friends or family members that are worried about their investments, worried about the markets, share this update with them. Ask them to call us. Certainly, you call us at any time. 601-856-3825. I look forward to talking to you. I'm Chris McAlpin. Take care. God bless.